Hey guys, Eric here, Mr. Fired Up Wealth. If I told you there was a small cap growth stock that was in the healthcare sector, but leveraged cloud and SaaS technology to not only improve lives, but save businesses money that had tremendous run rate in front of it, would you be interested? Stay tuned. When you think about it, guys, I mean, some of the biggest winners I've had were small caps when I invested in them, and they're hard to find. How many YouTubers are covering small cap growth? I mean, especially stocks that aren't spec. I don't consider this company spec. It's considered small cap at about a $1 billion market cap. It's considered healthcare, but really it's technology. In fact, it's software as a service and cloud technology that not only helps businesses save money, it also saves lives. And there's a tremendous amount of room and growth. They navigated the pandemic very well, and they've actually made some key sales. This video is going to give you deep dive breakdown and analysis of why I bought the stock. So, it's something that if you really want to learn about the company, we're going to look at the 10K, we're going to look at the website, we're going to look at a lot of different things. Grab yourself some popcorn, make yourself comfortable, and stay tuned. Okay, guys, so I just poked myself in the eye. It's red and I can't see out of this eye very well, so bear with me because I have to do a lot of reading here. I'm going to do my best to finish this video and make it as good as I can. This is something that we don't do enough, and it's something I do when I'm researching any stock that I'm going to buy. I go and look at their 10Ks, and it sounds boring because they're very long. There's a lot of legal jargon, blah, blah, blah. But seriously, guys, try to incorporate this into your regimen if you're a serious long-term investor. This tells you so much about a company. I can't even explain to you how important these are. They usually are done at the end of each year. This was completed at the end of 2019, so December 31st is their 10K for Tabula Rasa Healthcare Inc. So I'm going to read this overview because I think it really paints a good snapshot of what the company is, who they are, what they do. You can search the entire web and it will not explain to you what they do in a paragraph like it does right here. So bear with me. I'm going to read through this. This is really good information. So it says, Tabula Rasa Healthcare Inc. is a leader in providing medication safety technology and services that enable prescribers and pharmacists to engage patients, optimize medication regimens, improve patient outcomes, reduce hospitalizations, and lower healthcare costs. These are really good taglines if you're a salesperson. They're very good business, drivers to help a salesperson sell their products. So I like these. We deliver our solutions through technology-enabled products and services for medication risk management, which includes bundled prescription fulfillment and reminder packaging services for certain client populations with complex prescription needs. Many of our products and services are built around our novel and proprietary Medication Risk Mitigation Matrix, or MRM Matrix, which enables optimization of a patient's medication regimen, personalized medication selection, dosage levels, time of day administration, and reduction of the total medication burden by eliminating unnecessary prescriptions. We believe we offer the first prospective clinical approach to medication risk management, which is designed to increase patient safety and promote adherence to a patient's personalized medication regimen. Wow, it's a mouthful, but hopefully that helps. Okay, real quick, their strategy. So number one, they want to further penetrate the programs of all-inclusive care for the elderly market. They want to continue expansion into the payer and at-risk provider markets. And they want to continue to innovate and expand platform offerings to meet evolving market needs, and also selectively pursue strategic acquisitions and partnerships. So those are their 4 pillars. If you want to read more about it, go to the 10K. This part is important. Just stay with me for a couple more minutes. I want to talk to you about the different types of software and what those software platforms do. Our software and services. So high level, it says our cloud-based software applications are designed to assist prescribers and pharmacists with patient engagement, identification of high-risk patients, clinical decision support, documentation of clinical interactions, ordering medications and lab tests, and also care management. All right, so I just spent like an hour editing and I tried my best. I read through every one of these different products they have, and it was just boring. It was so boring. And I'm like, I can't do that. So I'm going to come back, and I just cut out like 5 minutes. So I'm just going to show you what these are. If you're interested, go to the 10K, go to the website. They have a lot of different products. but you get the idea of what they do. So they have, okay, so this MRM Matrix is currently available. And if you look at this, I'm going to highlight it on your screen. Here's all the different platforms they have. So they got TrueChart, they've got PaceLogic, they've got Prescribe Wellness, but they do different things in the medical field for technology. And that's really what you need to know. If you really want to study it, you definitely should. If you're going to invest, you definitely should, but you do not need me to read the next 3 pages word for word. So I'm cutting that out and we're moving on to the next spot. The key to remember with these guys is they're a small health tech data company. The company is leveraging big data analytics to save money for companies and also lives, which is, it's a compelling story. The ADEs is the big one, and we're going to go to a chart here in a minute and show what ADEs are. An ADE is an adverse drug event, and that's when someone is harmed from misuse of a medication, and this is a really big problem. So this is something I got from their website, but it talks about medication errors, and then over here you see adverse drug events. These are blue areas. There's adverse drug reactions. So ADEs are harms directly caused by medication at normal doses, okay? Now, check this out. So this is leading causes of death in the United States. 647,457 from heart disease, 599,108 from cancer, and 173,000 Americans die from adverse drug events, or ADEs. That is a huge number. And that's basically what an ADE is, again, is when someone's harmed from the misuse of medicine. It's a big, big problem, as you can see. There are over 50 million ADEs every year, and they cost the healthcare systems up to $130 billion per year. They also result in, as you see on your screen, 173,000 deaths every year, making ADEs the 3rd leading cause of death in the United States. Absolutely astounding. A lot of people probably just don't even know that. Specifically, the company has created a proprietary subscription software solution, the Medication Risk Mitigation Matrix, which combines drug safety and composition data with patient health and vital data to create optimal medication regimens, which match the right medicines to the right patients at the right doses. The big idea is simple. Data-driven, optimized medication regimens will result in fewer bad prescriptions and inappropriate drug uses. That means fewer ADEs, less ADE-related deaths, and lower ADE-related costs. Now, this is something I read from an article, and I'll put a link in the video in the description if you want to check out the article, but it says, this is in quotes, "Over the next decade, Tabula's medication risk management solutions will go from having a few customers today to being the standard for issuing medication across the entire United States healthcare industry. And as they do, both money and lives will be saved. And Tabula's revenues, profits, and stock price will all roar higher." Okay, so really quick, let's look at the fidelity. You can see the price performance on the 52-week is about 8.21%. I'm looking at the max chart here. At the middle of 2018, it was all the way up to about $91. Today, it's trading around $58.50, which is about where I bought it today. I just got a starter position today. You can see that the ticker is TRHC. It's considered healthcare, but really it's technology play in the healthcare space, which is why I like it so much. It's a small cap with 1.32 billion on the market cap. And for those of you who have watched this long, you're probably a fan of the channel and you might own the ETF SKY, that's SKYY. This stock actually is in SKY. It's about 0.68% the last time I looked, so it's not a very large position. But this is, you can see it doesn't have a lot of volume, 225,000. The 90-day average volume is 339,000. It's beat earnings the last 3 quarters. There's this, they consider this SaaS technology in healthcare. This is pretty cool. I mean, it's labeled healthcare, but it's in Sky, and everything in Sky is basically cloud or SaaS related. So I like the stock a lot. It has a lot of potential. There's a lot of drivers for it. Let's look at a couple other things here before I give you my final analysis. Okay, 2 really quick things that are important. This is actually from July 15th, 2020. It says Tabula Rasa Healthcare launches MedWise to prevent adverse drug events. So we've talked about this through the whole video. This is the adverse drug events, the ADEs, and it says Tabula Rasa Healthcare today launched MedWise on its prescribed wellness platform for pharmacists to compare how different medications interact with each other. And it goes on and on and on. So I'm not going to read all this, but this is huge. And this only happened a few days ago. This is something I think is going to be a really big deal for the company. So I'm going to zoom in here. Tabula Rasa signs deal with CVS. Now this was from December 17th of 2019. And it says South Jersey medical technology company Tabula Rasa Healthcare has entered into a deal with CVS to provide medication management services at 9,900 CVS retail pharmacies across the country. Financial terms of the deal are being kept confidential. Under the arrangement, Tabula Rasa staff at its regional call centers will collaborate with local CVS pharmacies to complete medication reviews and other clinical interventions designed to improve medication adherence and address gaps in care. It says here, Tabula Rasa CEO Calvin Knowlton said, the goal of the partnership is to improve medication therapy, health outcomes, and prevent disease. The company's noted that more than half of Americans take an average of 4 prescription medications a day. What? I mean, it says more than half of all Americans take an average of 4 prescription medications a day. I don't take any. Do you guys? I mean, that's crazy to me. I mean, that's good if it's helping people. I didn't realize that many medications. I need to buy some more pharmaceutical stocks or something. I wanted to show you, this is another document I got from their investor relations, but I thought this image was really good. This is the outdated method here on the left-hand side, and this is MedWise and simultaneous multiple drug analysis using all these words I can't pronounce. So 2020 and beyond growth drivers, they want to accelerate adoption of MedWise solutions by healthcare plans across all lines of business, including Medicare, Medicaid, and commercial, increase the number of pharmacists licensing, continue to add new PACE facilities, obtain peer-reviewed publications. Awesome. Okay. So this is, I listened to, because I'm a nerd like that, I listened to a couple of their earnings calls. The most recent earnings call, I think it was about a couple months ago. And you can see on your screen, so overall, through the first 4 months of 2020, so I actually listened in on this and then realized there was a document. I could have just got the document. So here, I'm going to make this easy for you so you don't have to listen to the hour call. Through our first 4 months of 2020, the pandemic did not have a material impact on our business while navigating potential challenges, focusing on potential short-term and long-term opportunities. And I want to just read from my notes, but you can actually see the same numbers, I think, in here. But the sales pipeline, they said, was 49% higher on May 1st, 2020 versus January 1st of 2020. So their pipeline is 49% higher in May than it was in January of this year. The number of aggregate opportunities, this is important to me because I'm in sales, so I understand like how these sales pipelines work. The number of aggregate opportunities is up 68%. The first quarter bookings is 200% higher than any quarter in 2019, 200% higher than any quarter in 2019. Exciting new wins as well, and it says there's 2 large healthcare platforms, and they didn't say the names, other key wins that won't show up until the second half of 2020. I think this is the time to buy this stock. I think it's priced fairly attractively where it's at, but I think this is when you want to get into a company before it blows up. And I personally think that this company is positioned well. They're basically telling you that they've got all this great stuff going on. They've got this partnership with CVS. They've won a bunch of deals. They don't go into any details, but they're telling you on the call that basically these deals aren't going to show up on their books until the second half of 2020. Well, as soon as they start reporting those earnings and everything and their numbers are higher, the stock price in theory should go up. So I'm a buyer here before they have the next quarter earnings. I think there's a lot of opportunity here. I think long-term, there's a ton of opportunity. So it's one that I added to my portfolio today. All right, guys, so there you have it. That is my take on Tabula Rasa Healthcare. It's a really cool company. It's small with a lot of upside potential. There's, of course, risk. I did buy some shares today. I bought about a fourth of a position. So I'm going to dollar cost average in. I always recommend that you do the same. Looking at the charts, though, I will tell you that it's positioned really well here. I think that short term, we could have a nice little run here. I think that it's a short term and long term. So when you look at the charts, it's set up very, very well. So, you know, you may want a dollar cost average, you might not. It's up to you. You need to do your own homework, do your own due diligence, decide what is best for you and for your portfolio. Now, if you have not subscribed, I need you to please do that for me. Click the bottom right-hand corner, hit the subscribe button, click that little bell. That bell is going to give you notifications. So every time I launch something new, you're going to be able to see it and get notification right away and check out the new video. If you haven't checked out our Facebook group as well, go on there. We've got a private group with about 2,800 people on there. We like to have great Q&A, deep dive conversation. And if you like the video, please hit the like button, drop me a comment. Seriously, guys, when you guys collaborate and you give me feedback, it really pushes me to do a better job for you, to make more videos. It really motivates me. So I appreciate all the support. It's been an amazing run over this past year. I can't thank you enough. So thanks for watching. Thanks for being here. Have a great rest of your day. Take care.